We're taking a look at a 4-year walk forward test of the 7 trading systems for the E-mini S&P Futures. Take a look here, Gap Continue 1. We released this a book of ours in July of 2010. It's on Amazon. I'll show you that link for that in a minute. But here it is. This is Gap Continue 1. Here is the equity curve. We released it in this time frame. And the walk forward is a positive equity curve, $117 average trade profit. Doesn't include slippage and commission, $3,500 drawdown. Gap Continue 2. There's a Gap Continue 2 and a Gap Continue 2B. And you see each of those in this window right here. The one on the left is Gap Continue. And it includes back to 2005 as well. You see the total net profit, average trade profit, drawdown. Here is the equity curve. Here's an example of a system that goes through a sideways period for almost 4 years. We released this book in this time frame right here, July of 2010. Went sideways, and then now it's continuing higher over the past. Since 2014, it's had to move up. So you can see that 2012, 2013 wasn't profitable, but 2014 is done really well so far in this short year so far. It's April of 2014. Gap Continue 2B does a little bit better. Very low drawdown, very high average trade profit. And here's a really nice equity curve. This book was released July 2010. So this time frame, nice walk forward equity curve. Gap Fill Combo. Larger drawdown. We had this book released in this time frame, July of 2010. Back to this right here. And so the walk forward was very good until about April of 2011. And the market went through a period where it did not fill gaps very well at all, no matter what type of gap fill system you used. From April of 2011 to December 2011, 8-month period where it just had its worst case drawdown, did not fill gaps well, but it's back to an upward equity curve the way we've had in the past. Money management algorithms can help a strategy like this, and that's Gap Fill Combo. Gap Fill Combo is comprised of Gap Fill 1. Yeah, you see Gap Fill 1 is long today. Gap Fill Combo is a combination of Gap Fill 1 and Gap Fill 2. And so the Gap Fill 1 strategy is long today. You can see that. And of the two, the Gap Fill 1 has done better. So if you take a look at Gap Fill 1, book was released. Here's the release, July 2010. The drawdown was less than Gap Fill 1. And then a continuation of the equity curve moving higher. There's the average trade profit. There's a drawdown. So good results. Gap Fill 2. Also, a component of Gap Fill Combo didn't do as well. You can see the results there. Equity curve hasn't recovered quite as well. So Gap Fill 1 does better. Gap Fill Rank is a very selective strategy. Doesn't trade very often. And if you take a look at the equity curve, very few trades. July of 2010 is back in this time frame. And so there are the results. And so that's the latest report on the gap strategies, gap continuations. There's a few gap continuations and some different gap fill strategies. And so also that is from my book. I'll pull that up. If you go to Amazon, you can see 7 trading systems for the S&P Futures. That's the book that I wrote. There's different listings here. You can get it on the Kindle or the paperback. And so the code for those strategies is in those books, and you can also purchase it from our website. Let me know if you have any questions.